At the AI Summit, but let's get back to markets and let me welcome on board Rahul Shah and find out what he's suggesting to be done in this market. Rahul, hi, good morning. Good to have you on the show. Rahul, it seems that resilience that the week started with, it all got undone in one day. What's the trend in the market telling you? I mean, is it still time to sell, or do you see any sort of recovery anytime soon?
Good morning. I think what we've seen in last couple of weeks, I think post-budget, trade deal, so on and on, I think overall markets have been in a seesaw if you look at it in last this entire month. So my sense, I think the result season is what we ended, I think, with a strong numbers and a fourth straight quarters with a double-digit growth in terms of profit, in terms of most of the sectors what we cover. So my sense, the result season was quite strong, and few sectors, I think, bearing apart. I think what we cover, I think, 90% of the sectors reported a growth in entire. So my sense, I think three large sectors what to talk about in the Nifty universe. One is obviously BFSI. I think that entire sector saw double-digit growth, and we believe that will continue to do well. So, and that is what we are seeing in the reflection. Banking stocks and NBFCs is doing quite well in last 6 months to 1 year. So, and we continue to believe that I think both private banks, public sector banks, plus select good quality NBFC, all will do well going forward. That is what is one sector. Second, I think what we saw is metals. I think a fantastic rally in last 2 quarters we've seen, and there was just a halt, and I think they'll continue to do well. So I think gears might shift. I think we saw ferrous, non-ferrous, all performing. Now I think that things should move to steel. I think steel post the safeguard duty plus the HRC prices have also firmed up. So we believe that I think the steel stock is ready for and that the metal play to do well in next. And thirdly, I think consumers in line auto, I think post GST2, I think this is just this thing. We are very positive on the next 2-3 quarters, yet the benefit yet to come on it. And cement numbers were good, and I think we feel cement also should continue to do well. So I think in nutshell, I think the sector remains positive, and we believe that I think it's one should use this opportunity in a large cap stock. Still, there's a lot of opportunity to be invested, and we are positive in the markets.
Rahul, want to discuss Reliance Industries, especially after them sort of significantly accelerating their AI strategy, $110 billion worth of investments. That in light of the impending Geo Platforms IPO, hopefully this year, wanted to understand how much of this 100 billion valuation is really tied in and dependent on how, Geo would list as opposed to just the telecom subscriber story anymore.
I think Reliance with the full conglomerate, if you look at it, obviously, number one, what way the telecom stocks have done in last 2 years, I think this will continue to do well. So I think one is obviously the Geo plus the retail play. I think what the market is thinking about and how things will shape up. And thirdly, I think obviously the core businesses, what they have into. So all three businesses and the stocks, if you look at it, has done nothing in terms of in last 1 year performance, and valuations are reasonable. So we believe that I think they are doing the right things at the right time. So maybe the valuations might stage might come back and maybe move from here. So I think we're positive on Reliance as a portfolio. One should look at it.
Rahul, how do you look at Reliance from a point of view that you're coming out with the next cycle of CapEx, which is $110 billion into data centers and AI computing, but it also brings in some kind of debt on your books again. Something which the street was a little worried a few years back, and they've gave a commitment of going net debt zero, and then they achieved that much ahead of the deadline. And again, you have nearly net debt of nearly 141,000 crores on his book now.
So I think if you look at it, I think the way the Reliance have been, I think, and in last so many years, I think from a high debt to lowering and shifting businesses and whatever businesses, most of them where they have invested, they have been a successful and anyway. So what we believe is entire, as you rightly pointed out, the businesses which they have gotten into last 4 or 5 years also, they've ensured that they come out with and make it ensure that they go it successfully. So I think this debt issue we are not so worried about, or Street is worried about. They're capable of with the cash flows and the core businesses what they have. So I think it's just a matter of some time.
Okay, that's that on Reliance. We'll take a very quick break.
With Kunal on the technicals, and of course Rahul Shah is with us on the fundamentals. Rahul, we've spoken about IT. Give us your sense on metals, the kind of move that metals have seen of late. They've also seen a correction, trying to claw back a little higher for a couple of days this week for names like Hindustan Zinc, Hindalco, but they continue to remain under pressure largely. Given the kind of moves the metal space has seen, and now that once again there is so much geopolitical uncertainty back into the narrative, you have gold and silver prices that are starting to see a little bit of an uptick once again. Do you believe the metal pack could once again begin to see the kind of move that it had seen, let's say, a month or two ago? Or maybe the extent of the rally could not be similar? If you could give us your thoughts on that.
So I think a way the metals have, the base metals have done well in last 6 months to 8 months, if you look at it. And I think this looks like that, just a pause, I think, because of the quarterly numbers and what we saw, volatility in the precious metals. So I think it does not look like that there could be any disruption in the metals very immediately for next quarter or so, or maybe next 2 quarters. If you look at the commentary by most of the management of the listed play, whoever has come out with the numbers, I think they were very confident, and they were confident about the growth and the price remaining firm in most of the metal spreads. So what we believe, I think, going forward, as we discussed, I think obviously we've seen most of the metals rally, but I think steel has not done that great in terms of what it has into it. So I think we just saw some prices bottoming out, and steel stocks, steel prices, HRC moving from 47 to 53, and plus remain for a structured growth in India. So I think that sector can do well. Second, I think, as you pointed out, aluminum, I think that again remains a strong setup. I think the prices are firm. Most of the analysts on the street have estimates, I think, and the number wherever they've taken into an account of around $2,750 to $2,800, and I think that revision will keep on changing as per the prices remaining firm. So I think that aluminum also remains strong. Zinc, and I think if you look at the prices are quite firm. So I think this entire metal as a entire pack, if you look at it, then I think we are positive on it, and it should continue to do well in next couple of quarters.
Okay, so that's a take coming in on metals and the pockets within that could do well going ahead. But lots of other stocks to keep on your radar this morning. Mitali is joining us with a list of some of them. Mitali.
On the back of earnings, we have two stocks that will be in focus today. First is ABB. The company has delivered an inline performance for this quarter. The revenue rose around 6%, while it was supported by strong demand across its different segments, that is the data centers, the automotive, railways and metals. While if you talk about the profitability front, we saw a decline of around 18%, weighed down by the material cost inflation and also higher labor expenses. The standout number, that is the order intake, which has hit a 5-year highs of 4,096 crore rupees, up 52%. Now the order backlog for this quarter ending, it stands at around 14,115 crore rupees, providing solid revenue visibility for the year 2026. Also keep CIE Automotive on your radar today, as the company has posted steady set of numbers for this quarter. The revenue, we saw an increase of around 13% for this quarter, while the PAT, it has increased around 10%. On the margins front, if you see, they have remained largely stable, with the EBITDA margin at 14% versus 14.2% last year, reflecting operational discipline despite the cost pressures. Also, Ola Electric, it remains in focus after Economic Times has reported that it plans to reduce its store network to 550 outlets. In its latest quarterly update, Ola Electric had already pared down its network to 700 outlets as part of its structural program, what it calls as a structural reset. Also, Waaree Energies, keep your eyes on that stock, as the company is in discussions with the Andhra Pradesh government to set up a 20 gigawatt battery gigafactory. Now, the proposed 8,000 175 crores of investment. It marks a significant expansion into the energy expansion and also could strengthen its long-term positioning in the renewable energy value chain. Also, lastly, let's have a look at Swiggy, as the company has announced that it is going to shut down its 15 minutes food delivery service, Snack, citing profitability pressures on that front. The development, it highlights the ongoing pressures and challenges in the ultra-fast delivery segment by these companies. Back to you.
Okay, Mitali, thanks so much for taking us through that. So yes, those are some of the stocks that you need to be watching out for. Lots of mixed moves coming in. In fact, it's negative for Swiggy that they're shuttering down their 15-minute business. On the other side, largely decent numbers coming in from ABB and CI Automotive, and in fact the order book number for ABB also looks very good. Kunal, a chart check on ABB, given the spike that we've seen in the stock price in the last 1 month. Before that it was stable, did pretty okay for itself, but the last 1 month in fact has been very good for ABB. Is this move sustainable on the chart?
Yeah, it looks like, because the stock has seen a good recovery from 4650, that was a low for ABB, towards almost 6000 levels, which the stock had tested in this rally. So it's been more than a 20% plus kind of a move for ABB in this month, from the lows, of course. So I think in that sense, the stock has done very well for itself. And names like ABB, I think, they have this very interesting quality with themselves in terms of price behavior, where they start to show signs of very strong recovery from their bottom. Then they go into a multi-week consolidation, and then gradual trend, picks up. We've seen that multiple times for ABB. If I could probably club the other names like Siemens, etc., they tend to move into a very similar kind of a price pattern. Even in the last, I think, a week or so, given the way the markets have behaved, and you've seen more than stocks recover, ebbing off 50% of the gains for themselves. ABB, in that sense, I think has just corrected from those 6,000 levels to 5,700. So it's a very meager kind of a retracement as compared to the rally the stock has shown. That itself indicates that we are looking at a potential change of trend for a stock like ABB.
Rahul, how do you look at the ABB numbers? Numbers pretty much in line, but there's a margin compression which is coming in because of cost, raw material cost escalation which is there.
So I think numbers, I think pretty in line with estimates. I don't think so anything major this thing. And I think if we look at it, I think the entire cap goods as a sector has been muted in last 1 year or so from their highs up once they cooled off, and I think they're just holding around. So I think numbers are okay. I don't see any major things is going to help into in terms of the near term in the stock.
Okay, so that's on ABB. But Rahul, talk to us about the broader sector at large. Names like Siemens, Thermax, you have ABB. Talk to us about how you are seeing the moves in the capital goods sector. Lots of announcements from the budget, lots happening on the other fronts as well. But how are you seeing this sector positioned in the overall market right now?
Well, I think if you look at it, I think usually the fourth quarter, the Jan to March, I think remains mostly strong for the entire cap goods as a sector. And then if you look at it, last year, I think the issue was about when we had elections, I think the spending from the government was lacking. And I think then that's what most of the cap goods and plus the overall spending by the lot of other corporates was also, I think, was a challenge. And I think we saw post a good kind of a rally and the valuations were stretched. We saw some kind of corrections again. So I think now last 2 quarters we've seeing that I think things are coming into the shape. I think this quarter also the numbers were in line, and I think we are seeing some kind of momentum building it back again in the cap goods sector. So I think what we believe, I think in order, I think what we like is obviously L&T being our preferred bets, followed by Cummins. I think Cummins, if you look at it, I think in cap goods, I think last 6 quarters with a double-digit growth with that good performance in terms of numbers. So I think we saw that every post numbers, I think the stock has got re-rated. And thirdly, obviously, Siemens and followed by ABB is the choice what we like in the entire cap goods.
Rahul, how do you look at the IT as a whole now? We've seen a steep correction for most of the stocks, AI-led. There is also the worry about whether these companies could remodel their entire business. And I think many of the funds are still, underweight, or they have cut the positions significantly in IT over the last 1 year.
As you rightly said, and I think if you look at it last 2.5 years, I think the entire IT sector was struggling. And I think we saw, I think year on year, the valuations got compressed for most of the IT companies. And in spite of, obviously, we saw the environment with zero growth or maybe a flattish growth kind of a stuff in most of the large names. And that is what the reflection was in the prices. What we saw, margins were pretty maintained, but nothing read, no larger clients acquisition and all. So I think that was one side of it. And secondly, last 2 quarters, the things were started improving. This quarter numbers, if you look at purely in terms of most of the large IT names, I think the numbers were decent, but the threat of AI, which has been quite some time, I think we saw disrupted recently in most of the IT names. So we believe that pure, I think from here there could be a risk, but I think with the post rate cuts in US, we might see the spending on from their side, the client side will start coming on. And what we believe, I think here the larger names should benefit in IT companies. So I think Infi, I think a couple of days back, I think what we saw from that investor day, the commentary coming out of it, I think what we understand, I think the larger names, TCS, Infosys, HCL, one should start building a position into it. We believe that there could be good upside from here. And whenever you have such kind of a crisis, I think in the stocks, I think we've seen that they tend to do well in the following couple of years.
Okay, so that's within the IT pack. Kunal, talk to us about how the IT pack is set up on the charts. Given this trend that we've been seeing over the last couple of days, that whenever there's positive news, the large caps react with a higher swing. But on the days of a negative news, it's the mid caps that are seeing more of a beating than the large caps. If at all you are penciling in a recovery here, which end of within the IT basket do you think will do better?
So large caps initially should do well if in case there is a recovery for the IT stocks, which I still believe should take some bit of more time, because after such kind of a 20-25% correction, you're bound to see a point where for at least another 3-4 weeks, maybe 1 or 2 months, that the IT stocks remain a little bit more sideways. Difficult to anticipate any kind of a V-shaped recovery unless there is any kind of a news flow which tries to subside the effect of the selling pressure we've seen over the last 15-20 days for the IT stocks. So that I believe could be a concern. And maybe I think on the short-term charts, if the rollovers start to pan out, say a tad bit more positive on the positive side, you might see some bit of positive relief which could come back into the larger cap names. But I think looking at the chart patterns for names like TCS, etc., the stocks at almost like a 3-year low compared to the price trends for many of the other tier 2 large cap names or the mid cap stocks, it indicates that the recovery would take, or rather durable recovery would take a lot of time for these IT names.
Okay, that's the take on IT. But what about the other newsmakers this morning? Rabinder is here with that list.
Well, yes, from the banking space, keep an eye on Federal Bank, where Federal Bank can be in focus today on the back of news that company has received an income tax refund order totaling rupees 686 crore, which includes interest for the assessment year of FY 12, 13 and 14. So back of this, keep an eye on Federal Bank. Apart from this, Texmaco Rail and RVNL can be in focus, where both company has signed a joint venture agreement to manufacture next generation rolling stock and execute global rail EPC project. And in this joint venture, Texmaco Rail will hold a stake of 49%. On the back of order win, Railtel Corporation of India can be in focus, where company has back order of rupees 35.6 crore railway signaling order from the North Central Railway. So back of this order win, these stocks can be in focus. And another stock that can be in focus on the back of order win is Pace Digitech, where Pace Digitech has received an advance LOA worth of rupees approximately 90 crore from the Railtel for the supply and maintenance of IP-based video surveillance system in LHB coaches. So back of this, this both stock can be in focus, Railtel and Pace Digitech. From the pharma space, Zydus Labs can be in focus, where US FDA has conducted pre-approval inspection from the injectable medical device, and the inspection was conducted from February 16 to 19, 2026 in the company's Hyderabad facility, and inspection closure with the nil observation. Apollo Pipes can be in focus, where as Gupta Holding promoter group members has purchased 5.25 lakh equity shares in the open market for approximately 76.65 crore between February 13 to 17. Novartis India can be in focus, where promoter Novartis AG has agreed to sell a majority stake of 70.7% stake in the companies to consortium of investor led by Chris Capital, and upon the completion of this transaction, Novartis AG will cease to be promoter of the company, and the acquirer will assume control and be classified as a new promoter. And additionally, the company said that Novartis India will change its name to remove all reference for the Novartis group within 120 days of the completion. So back of this news flow, Novartis India can be in focus.
Right, okay, Rabinder, those are some of the other newsmakers in trade. But Kunal, the two stocks that I want to talk about, and I guess the oil sensitives, given the spiral up in crude, ONGC and Oil India, and whether one can see some follow-through gains.
Yeah, I think, for a change, ONGC, I think moving up 4%, 5% on a day, I've not seen that happening for a prolonged period of time. In fact, the last, I think, 1 or 2 months, we've seen ONGC moving up from sub 220 levels to 25, thereabouts to now 270, 275, where it's trading right now. It's been a phenomenal recovery for ONGC. When we look at this on the quarterly charts, it indicates that the stock is coming out of almost 3 or 4 quarters of a huge consolidation. The candlestick pattern for the current quarter, of course, is on the very bullish side for ONGC. The stock confirming a breakout of those swing resistances, indicators being very strong, on the weekly and the monthly charts. I think all of that is auguring very well. And the beta is increasing slightly for ONGC because of the kind of price moves and the moves on crude oil prices which you've seen. So maybe I think that could be an indication that the stock is coming out of a huge multi-quarter consolidation. It augurs very well for the stock in the near term. And even if you try and compare, say, between these two stocks, ONGC as well as Oil India is a very high beta stock, and that stock, I think, from 530 or 550 levels, which it had hit, start of this month or end of the previous month, has corrected 10%. It's still off by 10 or 15% from those levels, but ONGC is come back to that previous swing high. So there is a slight confidence which is there from traders' perspective with respect to ONGC, as compared to Oil India. So I would probably prefer ONGC from either of the two names. And I think at current levels also from a multi-quarter perspective, looks extremely attractive.
Okay, so that's on some of the crude dependence. But on the flip side, Rahul, let's talk about some of the stocks that use crude as a raw material, or some of the sectors. It's paints, OMCs, tire companies. Do you believe that this volatility that we're seeing right now for the crude prices could have an impact on how Q4 is shaping up for some of these companies?
So I think more or less, I think last 3 quarters we are at static oil prices, and I think what we are seeing in terms of it, obviously impact is there, but I think most of them have their mechanism of hedging there. It's most of the raw materials, but I think in spite of that, I think we might see some pressure and wherever the crude is major raw material for any of the companies what you mentioned.
Okay, just want to take stock of the mid-cap end of the